What's going on? My name is Parker. Today I'm going to show you a little bit about volume profile and how you can use it no matter the strategy. It could be support resistance, supply demand, ICT. I don't know about that one, but literally any strategy, I find this to be useful, and I'm going to go ahead and show you now. So let's jump into the charts first. I'm going to explain kind of what typically you're going to see volume used as. So usually, this is NQ for reference. Usually when you are looking at volume, it is organized by time typically. So if we're on a 5-minute chart, we're going to see, and I'll go ahead and zoom in, each candle and the volume associated with that candle is representing 5 minutes and the volume that occurred within that time frame. So if you look here, I mean, this is simple, and this is pretty, everyone usually knows this. So if you're on a 5-minute, each candle is representing how much volume was exchanged within that 5-minute candle. All right, and if you change the time, you're going to see the same deal. Now, this is normally what you see. This is what every chart has. This is how it starts. This is the standard, all right? Volume by time, all right? Which is useful. You have to have it. But what volume profile does is it basically organizes volume by price. So you can see the specific volume that occurs at price level. So I'll go ahead and show you now. Let's see. Okay, so for instance, I'll just show you what I did today in the trade I took. So, okay, so here's my chart for today. There's two different types of volume profiles. I'll get into that. So what you're looking at here on the left is a fixed range volume profile. So basically, I can set the range for where I want to use this indicator. So what this is showing is, instead of showing, down here you have volume by time with each candlestick, which is useful, you still need that. It's telling me how much volume has been exchanged by price. So I can look here and see, oh, at this price level, we have a lot more participation. At this price level, we have a lack of participants. And this is only for this time frame. I can zoom out. So here, this shows me whatever is visible on my chart. So if I zoom out, it's going to adjust. It might be a little slow. Let's see. Maybe it won't adjust. I don't know. Should adjust, but it's taking its sweet time. Okay, there we go. Anyway, so there previously, that is a fixed range, so I can specify the range, which is useful, and I'll show you how I use that. But this is a visible volume profile. So here it's showing me how many participants are occurring at each price level, which is pretty useful. Most people, they trade off of price levels. They look at specific areas of interest, where they plan on shorting, getting long based on hopefully what the reaction of the market is at that time. And it's pretty useful knowing what the participants look like at your area of interest. Do we have heavy participation, or do we have a lack of participation here? It definitely makes a huge difference. It can be a pretty big confluence with your trading. I'm going to leave some links down below of some really helpful videos. They go a lot more in depth than I will about volume profile. They're pretty long, but I mean, if you're interested in trading, I would watch the whole thing multiple times over. It's so useful. But basically, for a brief explanation, volume profile, you're going to have a few key structures. So this one isn't as clear cut, so I'm actually going to refer to the visible range over here. So basically what you're going to have is, typically you're going to have areas called high volume nodes, and there's the most prominent one is down here. This is your high volume node, this whole area right here. And so what this is an area of increased participation. This is where you have a lot of participants participating in the market, and it's also what's considered fair value, because if you have a lot of participants in one area, both parties, both sellers and buyers, are willing to engage at this level. So there's a lot of activity. Typically, and people view these areas and structures differently in their own way. Typically, I view this as fair value, and it tends to be choppy. It can act as a support and resistance, but it's a real wide range, in my opinion. It's too wide for me to accurately trade around these areas. What I will use them as is my exits, because I already know this area is fair value. We like to come back into fair value so participants can participate, and I don't want to get caught in the chop. So I usually use this as an exit. Okay, the other areas you have are, you're going to have low volume nodes, which here we don't have any real prominent one that's sticking out. This whole area right here is kind of a low volume area. It's not specifically a node. Here you can see them a little bit better. Like, I would consider this maybe a low volume node, and I actually had this marked up, and that's where I took my trade from. But a low volume node, as you can imagine, is an area of a lack of liquidity, a lack of participation. So typically with low volume nodes, I mean, nothing is absolute, but what most often happens is they either get blown through. If you have enough momentum in one direction, they will get blown through quickly, or they will get rejected pretty quickly, usually. So the one absolute that typically happens, I guess is not absolute, is price reacts quickly around these areas. Whether it breaks through it with strong momentum or it rejects, it's often pretty smooth. The reason being is due to this lack of liquidity, if you have momentum, it's pretty easy for it to push through. There's not a lot of sellers or buyers counteracting the move, unlike a high volume node where you have so much participation in one area. It can rip right through, or due to that lack of liquidity, when you approach this area, due to the people that are unwilling to participate, you can have a reversal or even a continuation of whatever has been occurring. Like this was more of a downtrend here, so we actually had a continuation. We broke structure, came back, retested this area, and oftentimes another thing is they do often align with gaps. I don't care about gaps. I used to, until I realized they're useless unless you have a confluence with them. But they do often align with gaps, and this is partially why your gaps work, is these low volume nodes. Honestly, like if you start studying these, the validity of these structures is pretty noticeable. So that's another off topic thing. But anyway, the last structure we should talk about is the point of control. Unfortunately, volume profile isn't really talked about on YouTube. I think it's super underrated. But the one thing that is talked about, I would say more often, more people tend to know about this, is the volume point of control, which is it's the price level that has the most volume exchange within that specific area. So right now, based on this visible volume profile, it's right here. You can see previously with this fixed range from about 8 a.m. to, I extended it 8:52, it was here. But it's dynamic, it shifts, it constantly moves. So right now it's here. This is the most fair value point in the market. But as we trade, it'll shift. As volume comes into the market, it will change. But simply stating, the point of control is the highest amount of volume at a single price level. So those are the three main structures. There's other things you can look at, but honestly, to keep it simple, that's what I would focus on. Once again, you have high volume nodes, areas of high participation, low volume nodes with areas of illiquidity or lack of participation, and then you have points of control, which, like I said, is the highest amount of volume at one price level. So I'm going to leave some videos down below, like I said, that explain things a lot better than I do, but I would seriously consider this. Changed the way I trade completely. It's increased my win rate, my profitability. It's I don't know how I would trade without it, honestly. I don't know how I did before, period. So it doesn't matter if you do short-term or long-term trading. It's useful for all regards, and I'm telling you, with most strategies, I think it's applicable for sure. It's game changer. So hopefully you guys look into it. Hopefully this helped a little bit, and I should be making more videos soon. Thank you.